What is going on, Apes the Ape Army? My name is Tyler and welcome back to the channel. AMC is having a monstrous day. They are up about 1.15% in after hours, approaching $48 per share, currently at $47.70 per share. We are looking for a massive breakout. We are seeing margin calls that are going in right now in preparation for tomorrow and the new rule change that we are seeing actually being implemented tomorrow. So we are seeing these margin calls starting to come out today. We're seeing the hedge funds and institutions, at least the smaller guys that don't have the capital required to meet these new requirements and to stay in their short positions, likely being forced to cover, but that is a very small amount. We are seeing hedge funds and institutions with larger capital. This is really not a big deal for them. They're going to put up this extra collateral, keep their safe third-party collateral with third parties and stay in their short positions, because ultimately we want to see AMC stock go to $100, $200, $300 before we see the big guys actually being forced to cover and draining them of all of their liquidity. But that is a brief rundown of what is going on today. I do want to focus in on the SEC is finally stepping in with payment for order flow. They did drop some bombshells in what they actually said to reporters. So we got to go over this. Huge implications for AMC stock. If we see this come about pretty fast within the next couple of months, this could have a huge implication for the mother of all short squeeze. As we do know, over 50% of trading volume is routed to dark pools each and every single day. That is a very large amount. And Gary Gensler is basically saying there's a lot of fraudulent activities that are happening in those dark pools and different market avenues. So we need to go over this. Huge implications for AMC. Drop that like on the video, subscribe to the channel, and turn on that notification bell so you'll be notified every time something new happens with AMC that you guys need to be made aware about. Now, let's get straight into the video. I am jazzed up for this next rally. We are having a bullish breakout confirmation as we do currently speak. Today was really that confirmation that we have been needing, and we just went over everything you guys need to know about this breakout, the margin calls, the Ortex data, Stonko tracker data, all that good stuff in the last video. So definitely check that out if you guys have not seen that already. But let's get into what Gary Gensler said. He said SEC chairman says banning payment for order flow is, in quotes, on the table. Says a controversial practice that has brought in billions of dollars to brokers and high-frequency trading firms is in the crosshairs of the Securities and Exchange Commission and could be eliminated entirely. And a couple other countries, Canada, the UK, a couple other countries actually already banned payment for order flow, and their markets seem to run a lot smoother than ours do. So this is definitely on the table. We wouldn't be the first country to be doing this, just so you guys are aware of that. It says, in an interview with Barrons on Monday, SEC Chairman Gary Gensler said that a full ban of payment for order flow is, in quotes, on the table. Payment for order flow is a practice where brokers send trade orders to market makers that execute those trades in return for a portion of the profits. Gensler says the practice has, in quotes, an inherent conflict of interest. Market makers make a small spread on each trade, but that's not all that they get. That is not all that they get, he said. In quotes, they get the data, they get the first look, they get to match off buyers and sellers out of that order flow, he said. That may not be the most efficient markets for the 2020s. Obviously, it's not. They are matching buyers and sellers. They are doing this for their full profits, hurting our ultimate cause with AMC stock. So first and foremost, big congratulations for everybody that has pushed out this information. All these YouTubers, everybody on Twitter, just people in the comment section, you and me. Big congratulations to everybody. We are changing the financial industry forever, and that is, believe it or not, much more important than AMC as a whole. If you're considering investing for your overall investing lifetime, the next 20, 40 years, this is going to be a huge change for the rest of your life. So big congratulations. Now, Gensler has mentioned several times that the UK, Australia, and Canada forbid payment for order flow. I wonder why they forbid payment for order flow. A lot of sketchy stuff that happens, right? Asked if he raised those examples because a ban could also happen in the US, he replied, I'm raising this because it's on the table. This is very clear. It's not the only thing the SEC is considering. In quotes, also on the table is how we move more of this market to transparency. Big congratulations to apes. Yet again, this would not be happening if we haven't discovered so much fraud, manipulation, and corruption that is going on in the overall markets. And I do think this validates a lot of what we have talked about. Yes, I do think there is possibly billions of synthetic shares outstanding for AMC stock. Why not make the market more transparent when we have to come up with basically exposing what is going on? You have to believe there's a whole team of people that watch these YouTube videos, that watch the due diligence that is put out, and they have really drawn a red flag to some of the things that we have initiated. So I cannot say that enough. Big congratulations to everybody. Now, in quotes, transparency benefits competition and efficiency of markets. Transparency benefits investors. That is very true. Transparency is the best way. Now, payment for order flow is part of a larger issue with market structure that Gensler is trying to solve. He notes that about half of trading is done in dark pools or is internalized by companies that keep those trades off exchanges. Internalized, basically keeping them inside the company. So if, not really being the most ideal form of lack of transparency, right? They can do whatever they want. It's not being reported. Now, they keep those trades off exchanges. Even some of the trading that takes place on exchanges is opaque, and exchanges are paid through rebates that are similar to payment for order flow. Opaque markets where different investors have their trade orders processed differently have the potential for abuse, basically admitting that this is going on. This is a huge interview. There's a lot of bombshell information in this video, just the way they are presenting this information or the way that Gary Gensler himself is saying his words. I think there's a lot of implications. I think it proves a lot of what our due diligence we have done in the community to actually be true. Now, in quotes, it provides an opportunity for the market maker to make more and for ultimately the investing public to get a little less when they sell or have to pay more when they buy, he said. I think it also affects companies raising money, he added, because it could be a barrier to fair, orderly, and efficient markets. That sounds a lot like AMC, right? They're basically hurting. He's basically saying right here, they are hurting the overall share price. So it makes it harder. The company itself gets less money when they issue new shares. That's kind of what I'm getting out of that. I think that has a direct relation to AMC. I think it's very obvious. Now, the changes to payment for order flow may take place as part of a larger reshuffling of how trades are processed and tracked, which is definitely going to be a good thing as well. There have been a boom in retail trading in the past 2 years, with millions of new investors signing on to brokerage apps to trade stock, options, and cryptocurrencies for the first time. The boom has been driven in part by a change in the way that brokers make money on customer trading. Most brokers no longer charge fees for trades up front. They make money off trades by sending orders to market makers like high-frequency trading firms. The market makers execute the trade and profits off the difference between the bid and the asking price, sending part of the profit back to the broker. For most brokers, the practice is a relatively small part of their business model, often less than 10% of revenue, but for Robinhood Markets, which pioneered zero commission trading, payment for order flow makes up about 80% of its revenue. So that's a big thing as well. That's one reason one big reason, but there's a lot of reasons I'm not investing in Robinhood, ticker symbol HOOD or Hood, is because payment for order flow is such a tricky topic right now. If this gets banned, their whole company is going to be in financial ruin. So it's probably a good time, honestly, to take a little bit of money out of Robinhood. That's probably what I'm going to be doing, but I don't want to get sued here. That is only my personal opinion. Do what you guys want to do. I know none of you guys are probably going to do that anyways. Now, shares of Robinhood were already trading lower on the day, but fell further after Barron's report in late afternoon trading on Monday. The stock was down 8% to $43.03. That's the Robinhood stock. Now, the company has told investors in securities filings that the SEC focus on payment for order flow is a risk factor, but company executives have played down the possibility of it being banned. In quotes, our view internally is that we don't expect payment for order flow to be banned, said CFO Jason Warnick on Robinhood's latest earnings call. He added that, in quotes, we do think because of payment for order flow is such a small revenue stream, it's about 2 to 2.5 cents per $100 traded. That is not a terribly difficult revenue stream for us to replace. Now, it does continue on. It says, but the SEC has found that all those fractions of pennies add up. In fact, the agency settled allegations with Robinhood last year over how it negotiated payment for order flow, and it disclosed disclosures to customers. The agency said that Robinhood made deals from 2015 to 2018 with market makers that gave the company a much higher percentage of the spread, whereas other brokers generally gave more of the spread back to customers. The SEC's order said Robinhood had negotiated an 80-20 split, with the company receiving 80% and investors receiving 20%, whereas other brokers tend to have a split closer to 20% and 80%, the exact opposite. So Robinhood is taking a lot of payment for order flow off the back end of traders. And the regulators said that Robinhood's trade execution was so bad for customers that it had more than outweighed the benefit they got from not having to pay a commission. To settle the allegations, Robinhood agreed to pay $65 million, but neither admitted nor denied the findings. The company also said it has changed its payment for order flow practices. Proponents of payment for order flow say that as a way for brokers to make money that doesn't really hurt customers and allow apps to charge zero commissions. It is a major reason that more people than ever have started investing, Robinhood Warnick said. Never before has investing in the country been cheaper, he said, which is true, but it's going to be a give and take. It seems like to me a lot of this payment for order flow would really just balance out, right? If you pay commissions, you pay commissions. Payment for order flow is eating away at the money that you're actually spending for stock options and overall day trading, whatever activities that you guys are doing. So now let's get back to the whole AMC situation and payment for order flow. Now the government works slow, the SEC works slow, so I don't really expect this to have a huge impact right away, but the mother of all short squeezes could take could take a bit of time to play out. So if this does happen really in the next 3 to 6 months, I really don't think AMC is going to go through the MOAS in the next 3 to 6 months. Hopefully it doesn't. Hopefully we get this stair step like motion all the way up to a couple $100, and then we see the short squeeze start from there. So I think we're a bit of time away from seeing a couple $100 before the short squeeze actually does start and the big guys are forced out of their positions. But if this does happen faster, you're going to see orders going straight to the lit exchanges. You're going to see that reflected in the price action. You're going to see a lot more bullish activity with AMC stock overall, because the running theory is, right, that they hold our sell orders, right, or hold our buy orders. They release our sell orders. They release our buy orders once the stock is down in the ground. And that can happen because of the way the SEC has set up the rules with brokers and market makers. So that is basically the gist of this video. That is all you guys need to know. Drop that like on the video, subscribe to the channel, turn on that notification bell, all of that good stuff. There's also 4 links linked down below in the description. There's a free Discord chat all about AMC stock. There is a link for the buy and sell alerts. We have been killing it over there. Just hit a massive trade on Win, as well as other casino stocks, right? That's a big one that I'm playing right now. So definitely check that out. We have been killing it over there. Also, there's a link for Webull. Deposit $100, get 4 free stocks, each of them potentially worth up to $2,400. And the reason I do have that link is because you can actually turn off the availability for Webull to lend your shares out without you knowing about it. But if you want to use a non-payment for order broker, completely non-payment for order flow, check out the link for Public. Get up to $70 in your choice free stock. It only takes about 3 minutes time to sign up and receive your free stock. No need to link a bank account or deposit a single dollar to receive your free stock. Sometimes it's $10. Sometimes it's $65. You really never know. You might as well roll the dice and see what you do get. Now, I just want to say as well, love and appreciate every single one of you guys that come back to this channel, watch these videos. I'm doing my best. If there's anything you guys want, additional things you want to learn in the markets, I've been investing about 4 years, then definitely let me know in the comment section. I love to hear from you guys. But that is going to do it for this video. I will see you guys in the next one.